stock market ended last week with a new display of strength just ahead of the Fed's next monetary decision. It looks like the market is daring the Fed to be hawkish. So here we have my favorite technical indicator, the percentage of stocks trading above their 50-day moving averages. And once again, it bounced out of close enough to oversold conditions. The S&P 500 also had a bounce, pretty close to support at the May 2021 low. Now it's at the edge of the year's highs again. The NASDAQ did make a very marginal new high for the year and is back to where it traded last, I believe, September, where there was a last peak before a sell-off into the October lows. What can you say about the small caps? IWM's just going nowhere. And you could see that the last 2 days of strength only got it back to the 20-day moving average resistance. The VIX is just sliding away again, so those 2 days of strength just knocked it right off the shelf and hit a 18-month low. Intel was a surprise. Well, it tested the 50-day moving average just ahead of earnings, and it rewarded traders with a pop after earnings. I think it's probably going to be range-bound for a while from here. Caterpillar was first weak, then strong. It dipped all the way down to about 205 post-earnings, then rallied right back to 200-day moving average resistance, and on Friday it rallied above that. Amazon.com did the reverse. It was up, I think, about 8% in after-hours trading post-earnings, opened down, and closed with a 4.0 loss on Friday. But the uptrend is still in place with the 20-day moving average. Okta has just been slipping away. This has been quiet. I hadn't noticed this until I looked at some charts. All of April, it was just barreling downward. And then here's the big disaster of the week, or one of them at least. Impinj just completely collapsed after earnings. I made a huge mistake buying into the uptrend earlier. Here's Alteryx with its own post-earnings collapse. Again, showing that the market doesn't really know what's going on with this company as it swings from earnings to earnings. Finally, Stitch Fix disappointed me. I thought it might be an indicator of speculative fury or furor in the markets, and instead it's just slipped away in April and broke down. So you could, of course, as always, get more details at my blog, drduru.com/122. You can click on my profile picture to subscribe. See you soon.